Okay, so you've been sending over some really fascinating stuff about venture capital lately.
Mm-hmm.
And, one thing that really pops out to me is this, like, almost a split, like
Mm-hmm.
a tale of two cities kind of thing going on.
Yeah.
You've got AI investments,
Mm-hmm.
absolutely on fire right now.
Totally.
Everyone's talking about it.
Yeah.
Valuations are crazy.
Yeah.
But then at the same time, the rest of the VC world seems to be
Right.
kind of operating under these more
Yeah.
traditional,
Yeah.
grounded, financial principles.
Right.
So our deep dive today is all about trying to understand this, like,
Yes.
divergence.
Yeah.
What's causing it? What does it
Totally.
actually mean?
Yeah.
Especially for someone trying to, just stay informed about what's
Mm-hmm.
going on without getting completely,
Swept away.
swept away by all the AI hype
For sure. For sure.
or feeling like they're missing out on something crucial.
Yeah, and they.
So what really struck me in the material you sent
Yeah.
is this stark difference in how valuations are being determined
Yes.
right now for companies.
Right.
And we're seeing this very clear premium
Yeah.
being given to startups that are sort of labeling themselves as
Oh yeah.
failing compared to companies in other
Yeah.
sectors.
Yes.
And specifically, you shared some really interesting insights from allied venture partners
Yeah, they have some great points.
that I think really illustrate this trend.
They really do.
So we've been looking closely at their recent LP newsletter,
Uh-huh.
and it offers this really fascinating glimpse
Yes.
behind the curtain
Behind the scenes.
at how investors are actually grappling with this dynamic.
Yeah.
So let's just jump right in.
Okay.
What exactly is driving this gap in valuations, and what could it mean down the line?
Yeah, so Allied starts off by highlighting this one key statistic that I think is super important.
Okay,
And that is that AI native seed stage startups
okay.
are commanding, on average, a 21% valuation premium
Wow.
over comparable non-AI companies at the same stage.
Okay,
So right off the bat, you're seeing this like extra enthusiasm,
right.
maybe even hype baked into the price of these AI companies.
So early on,
Just super.
before they've really, proven anything.
Exactly, yeah.
Yeah, and they gave a specific example that I think really brings this to life.
Oh, yeah.
They were looking at a potential pre-seed investment
Okay.
in a 2-year-old AI startup.
Okay.
And this startup was seeking a $15 million pre-money valuation.
15 million pre-money.
Okay, now the really crazy part is this company had generated less than $25,000
Wow.
in annual recurring revenue,
Okay.
which is entirely from like these small pilot projects.
So 15 million valuation,
Yeah.
25,000 in revenue.
Yeah,
Hmm.
it's wild, right?
That's a pretty big disconnect.
And so if you do the math,
Yeah.
that's a revenue multiple of like 600 times,
600x.
which is just
Yeah.
bonkers.
Bonkers.
For context, the typical range for early stage deals,
Right.
even for really promising companies, is
Yeah.
usually somewhere between like 10 to 30 times.
Yeah. 10 to 30x their Traylong 12-month revenue. Yeah.
So 600x is not just like a little bit higher.
Right.
It's in a completely different universe.
Totally different stratosphere. Yeah.
And so what Ally did is they actually sort of back calculated
Okay.
what kind of exit would be needed
Okay.
to justify that $15 million valuation.
Right.
And they figured out that before any further dilution of ownership,
Right.
you'd need a $1.7 billion
Ooh.
exit enterprise value just to get what's considered like a venture scale return.
Yeah. To justify the risk base.
Exactly. So again, astronomical number for a company
Right.
at such an early stage
Yeah.
with such limited proven revenue.
Yeah. So the question is that kind of hypergrowth even realistic?
Right.
Especially at scale.
Especially at scale.
Yeah.
And Allied seems to have a healthy dose of skepticism about that.
Yeah, they do.
They definitely acknowledge that AI is, a big deal.
They do.
It's a potentially transformative technology.
Absolutely.
You would say it's like,
Early innings.
yeah, the early innings of a significant platform shift.
Yeah.
They're not against paying a premium
Right.
for the right team and the right idea.
Sure. For exceptional talent. Yeah. Yeah.
But at a certain point, they're like,
Yeah.
the numbers just don't make sense.
You got to draw a line somewhere, right?
And they actually have a term for this.
Oh, yeah. What do they call it?
They call it
I think it's
market exuberance.
market exuberance. That's it.
Which basically means
Right. Basically
the
means.
financial logic is kind of breaking down.
Right. It's more emotional.
Yeah. And that's when people start to lose money.
Exactly.
So this leads to what Allied calls
That's a good one.
the paradox of AI valuations.
Oh, yeah. The paradox.
Which I thought was super interesting.
Yeah.
And it's this idea that,
Lay it on me.
okay, so on the one hand, you've got all this excitement
Yeah.
around AI.
So much excitement.
And it's leading to these huge
And
valuations.
premiums. Yeah.
But on the other hand,
Uh-huh.
the barriers to entry for actually building AI products are getting lower.
Right.
Which seems kind of contradictory.
It does seem counterintuitive, right?
Yeah, because typically,
Typically,
lower barriers to entry
yeah.
should mean more competition
More competition, yeah.
and therefore lower valuations.
Yeah.
But that's not what we're seeing.
Not what we're seeing at
So
all.
what's going on?
Well, Allied points out
Okay.
that the availability of these really powerful off-the-shelf AI tools,
Okay.
like you've got Cursor for coding, Reflit for development,
Yeah.
all these things are making it way easier and faster and cheaper
Okay.
for pretty much anyone to build AI products.
Interesting.
So you don't need this like super specialized expertise anymore.
You don't need a PhD.
Yeah, you don't need a PhD in AI.
Got it.
So that's driving down the cost of development,
Okay.
but it's not driving down valuations.
So then why are these valuations so high?
It's the paradox, right?
Yeah.
And that's a good question to think about.
Yeah, and they give some data that I thought was really eye-opening.
Oh, yeah? What's that?
From the most recent Y Combinator batch.
Oh, yeah. YC?
Okay, so a full quarter of those startups
Wow.
had code bases that were like 95% generated by AI.
95%.
95%.
Wow. Okay.
They actually call it vibe coding.
Vibe coding. Love that.
And then on top of that, over half the companies in the batch were building AI products.
Over half of them. Okay.
So that's a massive concentration.
That is a huge number.
Right.
Yeah.
So if you connect the dots,
Yeah.
it seems like it should be easier than ever
Right.
for lots of companies to enter this market.
Yeah. Build competing products.
Exactly.
Yeah.
And that should, in theory,
Right.
drive down valuations.
Drive down valuations. Yeah.
But it's not.
But it's not.
So how should people,
yeah.
especially investors, but, even just, everyday people,
Right.
how should we be thinking about evaluating these companies
That's the million-dollar question.
or understanding these trends?
Yeah, so Allied highlights two key risk factors
Okay.
that are especially important to consider right now.
Okay, let's see.
The first one is, and this might seem obvious,
Okay.
but it's overvaluation.
Overvaluation.
So when startups are priced so aggressively at the seed stage,
Mm-hmm.
it can create a lot of problems down the road,
Problems like what?
like down rounds.
Down rounds. Okay.
So if a company raises a ton of money
Okay.
at a crazy high valuation,
Uh-huh.
but they don't hit their growth targets
Yep.
when they go to raise their next round.
Yeah, there's Series A.
Series A.
Yeah.
They might have to accept a lower valuation,
Oh, I see.
which is a down round.
Okay.
And that can be really painful for everyone involved.
I can imagine.
It leads to dilution for the early investors. Founders lose some control.
Yeah.
It's not a good situation.
So this is a real risk then.
It's a very real risk. And Allied cites data from CB Insights
Okay.
showing that nearly 40%
100%? Wow.
of startups that raised at peak valuations in 2021
Okay.
experienced flat or down rounds in 2023 and 2024.
Wow, so this is not just like a theory.
It's happening right now.
It's happening.
Yeah.
So that's pretty scary.
Yeah, it suggests a potential market correction.
Yeah, and are there like broader implications?
Yeah, Allied also talks about this idea of
Okay.
portfolio contagion.
Portfolio contagion. Okay.
So if a venture fund
Mm-hmm.
has a bunch of companies with these really high paper valuations,
Okay.
but the underlying fundamentals aren't there,
Right.
it can make their LPs nervous,
LPs being...
limited partners.
Okay, the people who invest in the fund.
Yeah, the people who give them the money.
Okay.
And then it can become harder for that fund to raise money in the future
I see.
because new investors might be hesitant
Yeah.
to support those inflated valuations.
So it's like a domino effect.
Yeah, one overvalued company
Yeah.
can cause problems for the whole portfolio.
And potentially the entire fund.
Exactly.
That's pretty wild.
It's all connected.
Okay, so what's the second key risk factor?
The second one is revenue quality.
Revenue quality. Okay.
And this is particularly relevant for AI startups.
Okay, how so?
Well, a lot of early stage AI companies
Yeah.
generate their initial revenue
Mm-hmm.
from these pilot projects.
Right, from like proof of concept type things.
Exactly.
Okay.
And while that's great
Yeah.
for showing early traction,
Okay,
there are some real risks.
like what?
Well, one is customer concentration.
Customer concentration, okay.
So these initial pilot customers
Yeah.
might make up a huge chunk of the startup's revenue.
Okay,
But if those pilots don't convert
right.
to long-term paying contracts,
Yeah.
the company could be in trouble.
Yeah, all their eggs in one basket.
Exactly.
Okay, so what else?
The other big one is revenue predictability.
Okay,
So without those long-term contracts,
Yeah.
it's really hard to forecast future revenue.
right.
And that makes it tough to make decisions about
right.
hiring, product development, like
Yeah.
all the things you need to grow a business.
Right, because you don't know how much money you're going to have.
Exactly.
Right.
And it also makes investors nervous
Makes sense?
because they want to see predictable growth.
Right. They want to see that hockey stick.
Yeah, exactly. And Ally has seen cases where
Right.
AI startups are hitting
Yeah.
6, even 7-figure revenue numbers,
Okay.
but it's all from these pilots
Got it.
with no real long-term commitment.
That sounds pretty shaky.
It is super shaky, yeah.
Yeah.
Very fragile.
So even though we're seeing
Yeah.
like these higher bars for Series A funding.
Right, investors are getting more cautious.
More cautious, yeah.
Yeah.
Allied is seeing that seed investors actually have more leverage right now,
More leverage.
which seems counterintuitive.
It does, right?
So how does that work?
Well, basically, Series A investors
Yeah.
are looking for more proof.
More proof. Okay.
Real traction, a
Mhm.
clearer path to profitability.
Yeah.
But a lot of seed investors
Okay.
are still caught up in the AI hype,
I see.
and they're getting into these bidding wars.
Bidding wars. Wow.
Yeah, driving up valuations at the seed stage,
Okay.
which could create problems later on.
When those companies try to raise their Series A
Exactly.
and they can't justify those valuations.
Right, because the fundamentals aren't there.
So it's almost like short-term FOMO
SOMO, yeah.
is creating long-term risk.
Exactly. Fear of missing out.
Yeah.
Yeah.
Okay, so how is Ally approaching all of this?
So they're sticking to their guns.
Sticking to their guns. Okay.
Disciplined entry prices,
Mhm.
target ownership percentages.
Okay.
They're not abandoning their principles
Because of the hype.
because of the hype. No,
Okay.
they believe in fundamentals.
Fundamentals.
Yeah, and I think that's a good lesson for everyone.
Even if it's not AI.
Even if it's not AI, yeah.
Yeah. Just good investing principles.
Exactly.
And they have this great analogy.
Oh, yeah, what is it?
They say playing the game on the field is futile
Okay.
if the entire field goes up in flames.
Oh, I like that.
Instead, find a different field that others have overlooked.
Find a different field.
Yeah.
Don't play on the burning field.
Don't play on the burning field.
Love that.
It's very visual.
Yeah, it's powerful.
So to kind of sum all this up,
Yeah.
we've been talking about this really interesting tension
Yeah.
between the excitement around AI,
Uh-huh.
these sky-high valuations,
Yeah.
and then this underlying concern
Right.
about, are these valuations justified?
Fundamentals,
Their
yeah.
fundamentals,
Yeah.
the barriers to entry,
Uh-huh.
and the quality of the revenue.
Revenue quality, yeah.
So what are the key takeaways for our listeners?
Well, I think the big one is to be critical.
Be critical.
Don't just buy into the hype.
Don't get swept away.
Don't get swept away. Yeah.
Okay,
Do your research.
due diligence.
Due diligence, exactly. And
Mm.
remember that even with a transformative technology like AI,
Yeah.
those fundamental investing principles still matter.
Those fundamentals still matter. Okay.
Yeah. Things like reasonable revenue, multiples,
Mm-hmm.
predictable growth, strong customer commitment,
Long-term contracts.
long-term contracts, yeah, all that stuff.
So don't throw those out the window.
Don't throw it out the window.
Just because it's AI.
Exactly.
Which really makes you think,
Yeah.
if it's becoming so easy
Yeah.
to build AI products,
Right, with all these tools.
with all these tools,
Yeah.
where does the real value lie?
That's the question.
Is it just the idea?
Yeah.
Is it the execution?
The team.
The team, yeah.
Yeah.
Or is it something else entirely?
Something else, maybe.
Something that we're not even seeing yet.
Right under the radar.
Yeah, because everyone's so focused on
The shiny new thing.
the shiny new thing.
The high. Yeah.
Yeah, so I think this AI boom
Yeah.
is really raising some big questions
Big questions, yeah.
about where sustainable value
Mm-hmm.
is being created
Where's the real value?
in this new world
Yeah.
that we're all entering.
That we're all living in now.
Yeah, so a lot to think
A
about.
lot to think about.
But as always,
As always.
thanks for bringing this to our attention,
My pleasure.
helping us unpack it.
Anytime. Happy to help.
Awesome.
Yeah.
Until next time.
See you later.
See ya.